So what if Wall Street already picked its crypto winners? But it didn't pick one, it picked two, and nobody connected the dots. In March, the parent of the New York Stock Exchange took a board seat on OKX at a $25 billion valuation. Yesterday, OKX added BlackRock's tokenized treasury fund as collateral with Standard Chartered as custodian. Meanwhile, Ripple's stablecoin, RLUSD, is sitting at $1.6 billion, custodied by BNY Mellon, and it's already the redemption rail for that same BlackRock fund. Two firms, two roads, one endpoint. Right, so RLUSD. The origin is more interesting than most coverage credits. RLUSD is not actually issued by Ripple. It's issued by Standard Custody and Trust Company, a New York limited purpose trust Ripple bought in June 2024. The man running it is Jack McDonald. McDonald spent 8 years as CEO of Convera Financial Services, where he grew assets under administration from $5 billion to $125 billion. UBS before that, Georgetown Law. So when Ripple made him SVP of stablecoins, they weren't hiring a crypto native. They were hiring a Wall Street operator. The regulatory wrapper matters. RLUSD lives under a NYDFS limited purpose trust charter, the strictest stablecoin regime in the US. Reserves are bankruptcy remote. The OCC granted Ripple conditional approval for a national trust bank in December, and the federal rule went operational April 1st. So RLUSD is on a path to dual federal and state oversight. BNY Mellon has been primary custodian since July 2025. Reserves are cash, US Treasuries, money market funds. No commercial paper, no crypto collateral. As of late April, $1.59 billion in reserves, backing $1.49 billion in circulation, roughly 107% backed. And here's the counter narrative. The auditor isn't Big Four, it's BPM LLP, a top 50 San Francisco firm. Ripple chose a mid-sized crypto specialist over Deloitte or PwC. Second counter narrative. Everyone calls RLUSD the XRPL stablecoin. Reality, 82% of RLUSD supply lives on Ethereum, only 18% on XRPL. Most of the float is in ERC20 in DeFi. So when Ripple says dual chain, they mean it, but the gravity is Ethereum. Now flip to OKX. Star Su was born in Hunan, China in 1985. Applied physics at the University of Science and Technology, Beijing. Dropped a master's at Renmin. Engineer at Yahoo China. Co-founded Douyin, basically the script of China. June 2013, he co-founded OKCoin in Beijing. 2017, he launched OKX from Seychelles as China was banning exchanges. January 2022, OKX became OKX. Star Su's LinkedIn reads, quote, "Crypto will eat the world. Self-custody is the future. Everything will be on-chain." The public face is Hong Fang, Master's in Linguistics from Peking University, MBA from Chicago Booth, then 8 years investment banking at Goldman Sachs through 2016. She joined OKCoin as COO in 2019, president of OKX globally since January 2023. So OKX's multi-jurisdiction regulated playbook, that's a Goldman alum architecting it. Now, what happened in March? Intercontinental Exchange, the parent of the New York Stock Exchange, made a strategic investment in OKX at a $25 billion valuation. Bloomberg put the amount around $200 million. ICE took a seat on the board. Star Su still controls majority equity. Why, that's structurally huge. An ICE board seat on a non-US public crypto exchange is unprecedented. Coinbase has 0 TradFi institutional board seats. Binance, 0. This is the first crossover board seat between a Tier 1 TradFi market operator and a global crypto exchange. The scope. ICE will license OKX's spot crypto prices for ICE-branded futures. OKX gets distribution rights to ICE futures and tokenized New York Stock Exchange equities for its 120 million users. Live second half of 2026. ICE Chair Jeffrey Sprecher said, quote, "Our strategic relationship with OKX will expand global retail access to ICE's preeminent regulated markets and accelerate our plans to offer on-chain infrastructure and tokenized assets to US investors." End quote. Okay, here's where it gets interesting. RLUSD and OKX are not formal partners. No joint announcement, no co-branded press release. The bridge between them is one specific BlackRock fund called BUIDL, 2.5 billion in tokenized US Treasury exposure on a public blockchain. Both firms now run on it. The RLUSD side. September 2025, Ripple and Securitize deployed a smart contract that lets BUIDL holders redeem tokenized shares directly for RLUSD 24/7 instantly. Same contract works for VanEck's VBIL. Before, BUIDL holders waited for end-of-day windows. Now they swap tokenized treasuries for stablecoin in seconds. The OKX side, April 28th, literally yesterday. OKX added BlackRock BUIDL as collateral, with Standard Chartered acting as custodian. And here's the structural gravity. This is the first time a globally systemically important bank has acted as custodian for tokenized, real-world asset collateral on a crypto exchange, a G-SIB, the same Standard Chartered that custodies institutional cash on Wall Street. So put it together. An institution holds BUIDL, earns the yield, redeems to RLUSD instantly when they need to settle, or posts BUIDL as collateral on OKX to trade derivatives, all without ever taking capital off-chain. Now the honest counter-narrative. RLUSD is not yet supported on OKX Pay. OKX Pay only supports USDT, USDC, and Paxos's USDG. So when people say OKX is the RLUSD distribution bridge, half true. There's a quiet spot listing, no marquee deal. And there's a competing architecture. February, OKX Ventures backed STBL, a yield-bearing real-world asset stablecoin co-founded by Tether co-founder Reeve Collins. Built on OKX's L2, X layer, backed by a feeder into Hamilton Lane's senior credit fund, tokenized via Securitize. So OKX is hedging. They list RLUSD, they also fund the alternative. Okay, the honest section. February 24th, 2025. The Seychelles entity that operates OKX, OXK FinTech, pled guilty in the Southern District of New York. Not a deferred prosecution, a full guilty plea. The charge? Operating an unlicensed money transmitting business. Penalty? $504 million. $420 million in forfeiture, $84 million as a criminal fine. DOJ's findings were severe. $5 billion in suspicious transactions, over $1 trillion in U.S. customer flow from 2018 through early 2024, despite an official policy that supposedly banned U.S. users. DOJ said leadership prioritized liquidity over compliance. 3-year compliance monitor running through February 2027. That's the unstated reason OKX is delaying its IPO. Same year, February, Lazarus Group routed about $100 million of the $1.5 billion Bybit hack through OKX's DEX aggregator. EU regulators flagged it. OKX suspended the service, rebuilt, relaunched in May. Star Shoe apologized publicly in July for KYC false positives, locking out legitimate users. And one more. OKX is not licensed in Hong Kong. They withdrew their VATP application in May 2024, alongside Binance, Gate, KuCoin, and Huobi. Every China-linked exchange walked. So OKX is regulated everywhere except where it really matters in Asia. Now the RLUSD honesty. 1.6 billion is not nothing, but Tether is around 130 billion, USDC around 80 billion. RLUSD is roughly 0.5% of the global stablecoin market. End of Q1, supply actually contracted by 128 million, then rebuilt to a fresh all-time high in under 4 weeks. The mint redeem mechanics work at institutional scale. The market share is tiny. Right, where is this going? Start with RLUSD. March 31st. Convera, formerly Western Union Business Solutions, announced a Ripple partnership. Convera moves $190 billion a year for 30,000 business customers across 200 countries. The architecture is the stablecoin sandwich. Customer pays in fiat, Convera converts to RLUSD on the XRP ledger. RLUSD moves cross-border in seconds. Recipient bank converts back to local fiat. No SWIFT correspondent in the middle. Convera CEO Patrick Gauthier, who used to run Amazon Pay, said, quote, "Ripple is a clear leader in the crypto space and a natural fit for Convera," end quote. March 25th. Ripple joined the Monetary Authority of Singapore's Bloom Sandbox, partnered with Unloq. Unloq's SC Plus trade finance smart contract is built on XRPL and uses RLUSD to auto-trigger payments the moment shipment is verified. Pilot phase. If it works, that's the template for ASEAN trade finance on-chain. December. RLUSD goes native on 4 Ethereum L2s through Wormhole's native token transfer standard. Optimism, Base, Kraken's Inc., and Uniswap's Unichain. Same supply, more rails. Now OKX. Tokenized NYSE listed stocks live second half of 2026. April 16th. OKX launched a stablecoin funded Visa debit card in Singapore with Straits X. April 15th. XPerps. MiFID regulated 5-year crypto futures in the EU. March 30th. Aave deployed on X layer. And at Davos, Fang said it directly. Quote, "With the Genius Act in the US and MyCar in the EU, stablecoins are becoming the backbone of global finance, moving beyond just trading tools to real financial infrastructure," end quote. The convergence. RLUSD is racing to be the dollar leg of every cross-border payment, every tokenized treasury settlement. OKX is racing to be where TradFi shops for tokenized equities and crypto-native derivatives. Different products, same customer. The institution that wants TradFi compliance with on-chain efficiency. Look, the easiest way to get this story wrong is to think Wall Street picked one. They didn't. They bought both sides of the table. RLUSD is the dollar Wall Street built. BNY Mellon custodies it. BlackRock redeems into it. OKX is the exchange Wall Street bought into. ICE owns a board seat. Standard Chartered custodies the collateral. They don't have to be partners to be on the same team. So if you want to know whether TradFi crypto convergence is real, don't watch the price. Watch the rails. If this gave you a new perspective on RLUSD and OKX, smash subscribe. Drop a comment. Which side is the bigger story? RLUSD inside Wall Street or Wall Street inside OKX? Notion link in the description has every source, every quote, every receipt. See you in the next one.